welcome to this third online seminar about business in the Commonwealth. And we're going to be talking today about the complex issue of risk and resilience, and really the extent to which the Commonwealth has been thinking about this and where this might lead. It's a very complex topic which impacts on policymakers, businessmen, anyone who really has to think about investing money or time or effort in particular initiatives. And it's not a well understood area as well, but so much hangs on it. So I'm very, very grateful to Arif for convening this meeting. And we have four experts who will bring their own particular perspectives to bear on this topic. We have Dr. David Hilson, Nosheen Hassan, Robbie Lyle, and Rowan Douglas. And again, they're going to talk from their particular perspectives. But we might also think about what the Commonwealth as an intergovernmental organisation is doing in this area and what civil society groups can bring to the party. But let me hand over to Arif to introduce our speakers properly. Thank you so much, Arif.
No, thank you very much, Philip. And I'm delighted. In fact, I'm delighted actually we got a bit more gender balance on the panel, because it's not, we've got Shui joined us from the Insurance Development Forum. And I know that you're a great gender champion, so you will be delighted that we're a bit more gender balanced in that respect. But we have a great panel ahead of us, and it is a hugely important topic, risk and resilience in the Commonwealth. I was, for 10 years, I was the lead advisor to the Commonwealth Business Council, it was then called, on corporate governance. And one of the things I remember at that time, there was a lot of reviews of codes of governance in the Commonwealth codes of corporate governance. In fact, the Business Council brought out a Commonwealth code of good governance in terms of corporate governance. But one of the things I remember getting involved in was working with a number of countries, as the Commonwealth Business Council was doing at that time, to help and improve their guidance on corporate governance. And I think it was in the case of Pakistan, where one of our recommendations for a country which in fact had been, was growing very fast in terms of the number of companies that were joining the stock market and other indicators of growth, was actually a specific mention in their updated code of corporate governance on reputational risk. And it really brought home to me the importance not just of the Commonwealth and being a mechanism through which to share good practice and provide guidance, but also following that. Clearly, risk is something that the Commonwealth has grappled with in terms of its different manifestations. And in 2016, there was a roundtable meeting that was held at the Commonwealth headquarters, the Commonwealth Secretariat, to coincide with the publication of a book which Dr. David Hilson had edited. I was one of the contributors to, but with many others covering a range of topics, from everything from cybersecurity to political risk to reputational risk and many others. And it brought together high commissioners, it brought together the private sector, it brought together academics and others. And also one of the takeaways from that roundtable discussion was the fact that Commonwealth, on the one hand, is particularly exposed to vulnerabilities in relation to risk, from a range of contexts, but also there was a great opportunity to more effectively disseminate and share guidance, best practices in that area as well. And what we're trying to do today is to bring some of these ideas together. Since 2016, I've been fortunate to be formally working together with two people in particular, Robbie Lyle and Nosheen Hassan, through something called the Commonwealth Risk and Resilience Initiative, which is really trying to do exactly that, to bring more sort of cohesion and and coordination in this area. But I think there is a real opportunity. We've seen in the last 12 months a greater appreciation of the importance of risk, but also a better understanding perhaps of some of the work on resilience as well, both in terms of individuals, organizations, countries, communities, and others, and also indeed, qualities of leadership associated with that. So just with that broad canvas backdrop, what we plan to do is to spend to do this. I mean, we're a relatively small group, so what I suggest we can do is we can do this in 3 parts. Initially, I'm going to invite each of the panelists to make some opening remarks, and then we'll turn to what specific responses could be taken in this area. And then in the final part of the discussion, I'm going to ask in particular Nosheen and Robbie, and I might also chip in to talk about some of the specific interventions that could be made in relation to the Commonwealth. This happens clearly at a very important time. This is, we are just in the 100 days or thereabouts ahead of the next heads of government meeting, or whatever format that's going to be. And also, there is a lot of focus around issues to do with risk and resilience for a number of reasons. We've just seen in the last few days of developments in the Caribbean, which have brought home to us that whole very issue. So let us begin this afternoon. I'm going to invite Dr. David Hilson to begin by saying something about risk, and then we'll go on from there. So David Hilson is a prolific author. It was just reminding me a moment ago that he tries to aim to do a book a year, but he's certainly written extensively on areas of risk attitude in particular, and others. Edited the Risk Management Handbook that I just referred to a bit earlier, that I was one of the contributors to, but has also done a lot, which I think is really important. Perhaps the risk community needs to do more, David, in this whole area of risk outreach, if I can put it to you in that way. How do we talk about these issues so that people who are not so well versed or familiar with risk are able to make sense of them and actually understand them better? And I know you've been very active in that area as well. So David, a warm welcome to the Institute of Commonwealth Studies, and over to you.
Arif, thank you very much. And it's good to be part of this event. And thank you very much for inviting me along to this panel. I've been working in risk management for actually 35 years, since I was quite a lot younger than I am just now. And I've always been interested in 2 things. One is the ideas, and the other is the practicality, and trying to marry those 2 things together. Although I write, I'm not an academic, I'm essentially a practitioner. And I want to make sure that the ideas that we have can actually be used in practice to help people deal with uncertainty wherever and however they encounter it. So I've been given 10 minutes to share some thoughts which might be helpful as a kind of scene setter for this idea of risk and resilience in the Commonwealth setting. And I've prepared some slides, so I'm going to try and share those. I hope this is actually going to be visible to everybody. Yep. What I wanted to do was really specifically to focus on the idea of how we think about risk. So I'm going to talk about what I'm calling a risk-based mindset, and how that can be helpful in the context of resilience. So risk management, as I've said, has been around for quite a long time, and it's widely accepted. Everybody understands what the basic ideas of risk are, although Philip seems to think it's difficult. I'm not sure I'd agree. And it's very commonly practiced right across industry and in government settings and charities and so on. All sorts of different types of projects and programs of all sizes. And very widely around the world. So generally, we understand what risk management is, which means that clearly we're managing our risk effectively and everything is fine and sorted, isn't it? Or maybe it isn't. And certainly we still seem to see all sorts of corporate failures and projects and programs, major infrastructure projects, and all sorts of things not exactly going to plan. And so something is clearly wrong. Is there something wrong with the basic principles of risk management, or is it something to do with the way we apply it? And I'd like to suggest a very simple starting point, that the problem is not with the basic principles or processes of risk management, but it's to do with the way that we think about risk. So here in an ABC, it's obvious that the way we think about things affects what we do. Attitude affects action, beliefs shape behavior, culture influences conduct. And thinking, I think, is the key to understanding, or at least getting our risk management more effective. Obviously, risk management exists to manage risk, but how we think about risk determines how we try to manage it. And so if our concept of risk is wrong or limited or partial, then I think we're likely to have a problem in how we actually get around to managing risk in practice. So what I'd like to do in my remaining 8 minutes, I think now, is to try and talk about how we could think more clearly about risk and give you an introduction to what I'm calling the risk mindset, which is a more mature or complete way of thinking about risk in order to shape our actions towards risk. And I'd like to suggest to you 6 core values or core beliefs about risk, which will shape the way we act towards it. So moving fairly quickly, let me start with this. Risk is natural. It's part of the world that we live in, that it should be, with the VUCA acronym, volatile, uncertain, complex, and ambiguous. And we see that all around us, in the natural world, in the political world, in the environment, in corporate worlds, in our families and society, and so on. It's like wherever we try and go, there are question marks raining down on us, impeding our progress. And it's absolutely natural that we should encounter risk and uncertainty in every aspect of life. It's important that we get this clear as a concept, as a value, or as a belief. If we think that risk is unnatural, this shouldn't be happening to me for some reason, then I think it will affect the way that we try and approach risk management if we see it as something unnatural, different. Risk is just part of being alive. It's part of living in this particular planet that we do in the way that we do. And so we shouldn't be surprised if we encounter it. Risk is also manageable. A lot of people feel that risk is something that happens to them and they become the victims of risk. And therefore they're powerless. They just have to kind of roll with the punches, and there's nothing that they can do about it. Other people take a more positive view and to say that they're going to be victorious over risk and they're going to handle it and deal with it in a rather more aggressive and positive way, which might be a little bit optimistic, shall we say. But the truth is that we can do something about risk. We're not just the victims of the uncertain world and the uncertain environment that we find ourselves in. And we can choose whether to take a victim mentality or a victor mentality when it comes to risk. Whether we just say, oh, it's terrible, there's so much uncertainty in my daily life or in the things that I'm trying to do, and I just can't do anything about it. Actually, you can. And the whole discipline of risk management exists to help us manage the risks that we encounter wherever and however we encounter them. So let's not just think that there's nothing we can do. There is something we can do. But the third principle of the risk mindset is really important. Risk matters for a very particular reason. And to uncover the reason that risk matters, I'd like to just ask this question: is risk the same as uncertainty? Well, clearly not. All risks are uncertain, but not all uncertainties are risks. There are billions of uncertainties in the world. Well, of course, we don't know how many uncertainties there are, but they're not all risks. We don't record them all in our risk registers and try and deal with them. Somehow we filter the world of uncertainty to create or to understand the things that pose a risk to us. And this is because risk is uncertainty that matters. Most of the uncertainties in the world don't matter. And so we don't need to think about them, to record them, to talk about them, to think about how we might handle them. We need to filter out the uncertainties that matter, and the uncertainties that matter, that pose a risk to us, are the uncertainties that can affect our objectives. Risk is only and always defined in relation to objectives. What are we trying to do? That's what's at risk. And then risk management is understanding the uncertainties that can affect what we're trying to do and help us do what we're trying to do better by handling the risk. Which leads us to the fourth key value about risk. Not all risk is bad. When we think about the kinds of impact that matter, of course, our first thought is about bad things, adverse effects, threats, things that could hurt people or damage a reputation or performance or affect the things that we're trying to do badly. But the truth is that some risks are helpful. And as an illustration, let me show you this funny picture I found on the internet of a mouse and a trap. If the mouse is you and you're trying to manage your risks, what are the uncertainties that matter? Well, clearly the trap matters. The mouse doesn't want to be killed or injured, and you can see he's done his preparation and he's going very carefully to try to manage the threat that the trap poses to him. He really doesn't want to be killed or injured. But there is another uncertainty that matters in the situation facing the mouse. And it's not just the trap. He's also interested in the cheese. The cheese is an uncertainty that matters. Can he get the cheese off the trap in order to feed and make himself strong and healthy? And it's important that we recognize that there are good risks as well as bad risks, upside risks as well as downside, positive as well as negative. So we have uncertainties that if they occur would hurt us, prevent us achieving our objectives. We call those threats. But there are also uncertainties that if they occurred would help us to achieve our objectives. And we call those opportunities. Opportunities are not certain, they may never happen, but if they do happen, they make it easier for us to achieve our goals, to work faster, smarter, cheaper. And so clearly they are uncertainties that matter. And in the modern idea of risk, and something that's been around for the last 20 or 30 years in the professional world, risk includes both threats and opportunities. And the purpose of risk management is to minimize threats, but also to maximize opportunities, to prevent potential problems, but also to capture potential benefits. And if we don't see this, if we only believe that all risk is bad, adverse, harmful, unwelcome, then we're only managing half of our risks and we're only getting half of the benefit that risk management offers to us. So it's a really clear, crucial value that needs to shape our thinking as well as shaping our practice towards risk. Which leads us then to the next question: who is going to do this risk management? And a lot of people say, no, it's not for me. I have risk people to do that. I have technical people. I have someone else. It's somebody else's problem. It's not my problem. But if risk is uncertainty that affects objectives and I have objectives, then uncertainties that affect my objectives are my risks. And if they're my objectives and my risk, then I have to manage them. So if we ask the question, who is going to manage risk? The answer is you are, no matter who you are, because we all have objectives in the things that we're trying to achieve. And so what we need to do is find the uncertainties that could affect our objectives and then take responsibility for managing them. Of course, we might need other people's help to do that, but in terms of responsibility, my risks are my responsibility. Which leads me to the last of my 6 values or principles in the risk mindset. And that is, it's really important to be proactive, to do things in advance, to respond, not react, not to wait for the bad or good thing to happen, for the risk to blow up in our faces or to arrive and surprise us, but to see it coming and to do something in advance in order to minimize our threats and maximize our opportunities and optimize our ability to achieve our goals. So risk management offers a forward-looking radar that scans the future. What's out there coming in my direction? What big bad things can I see forming up in the future which are heading straight towards me that I can move out of the way of or protect myself from? What big good things can I see out there in the future which might just drift past and which I can readjust my position to capture and take advantage from? It's really important that we are proactive. So these 6 things in the risk mindset shape the way we think, but they also shape the way that we act. It's important that we remember that we can't avoid risk because risk is just part of the natural world. It's important that we recognize we're not victims of uncertainty, but we can do something about risk and manage it. Risk matters because it affects our objectives. And if we don't manage risk, we won't be able to do the things we want and need to do. But not all risks are bad. There are good risks as well. We can gain additional advantages by looking for opportunities, upside risks, and capturing those. My risks are my responsibility because they could affect my objectives, and therefore I need to do something about it, not to leave risk management to somebody else. And I need to do it proactively in advance so that I can gain the benefit, not letting threats blow up into problems or letting opportunities drift past when they could have turned into additional benefits. So it's really important that we think risk and think effectively. Let me just wrap up my 10 minutes or my time with a few final thoughts. In terms of adopting the risk mindset, we need to accept the reality that risk is all around us and seek to influence it because it can be managed. We need to focus relentlessly on our objectives and the uncertainties that could affect those, remembering that there are good risks as well as bad risks, and we need to find them both. Then we need to take responsibility in owning the risks that can affect our objectives and do something about them proactively in advance. This matters because thinking affects behavior, and aligned thinking creates aligned behavior. So when we're acting together, we can increase the strength of our ability to manage risk. Our session today is talking about risk and resilience. Common values don't necessarily mean that we have to act in a uniform way. What we're looking to do is to think in a common way, but then to tailor the responses, the way that we implement this risk-based thinking, this risk mindset, in an adaptive and responsive way, so that we can use these concepts, these values, these beliefs, this mindset, in order to address the specific risks that we face in our particular context. So I'd like to just summarize by saying the way that we think can help us to become resilient if we think in a coordinated and aligned way. If everybody thinks the same about risk in terms of the concepts and values, it will help us when it comes to acting effectively to influence the uncertainties that matter. Well, I hope that's been a useful kind of context setting for the rest of what we're going to talk about, risk and resilience, in the context of the Commonwealth itself. And I hope that you'll see that how we think about risk really does make a difference. So there will be opportunity for questions, but not now. We're going to hear from the other panelists first, and then take questions. But I hope that what I've shared with you will make sense, but also raise questions with you in how you think about risk and how that's shaping the way that you act towards risk in your particular environment. So that's all I like to say in the time that's available to me. And I'll hand back to Arif to give the floor to somebody else. Thank you very much.
Thank you very much, David, and thank you very much for setting the scene so clearly, and also this whole idea that you've been highlighting, in terms of really the risk mindset, the approach that we have to risk, and also I think the point around agency, that risk is something that we do have a degree of control over. And as you were speaking, and others may have had a similar reaction, I don't know, but I was thinking about that room in Paris in 2015, which was filled with people from the Commonwealth, because they'd just come from Malta, and a lot of them had come because they were all on the same page, 52 of those countries, or 53 of them, I think, apart from India at that time, although India quickly came around. I'm talking about climate change. So, climate change risk was a very good example of where I think there was an incredible degree of alignment in terms of countries in the Commonwealth at the Paris climate change talks. And in fact, because many of them came directly from Malta, where there had been intensive discussions during that week, there was a common recognition of very much what I think you were saying, David, the challenge, but actually what they were able to do about it. And I think it was a really important intervention, because that really helped significantly those discussions in Paris get off to a very strong start. So thank you very much, David, for that. Very helpful overview. So I'm going to ask Nosheen to come in next. I know Nosheen, you're just with us for about another hour or so. I know until 5:30, but certainly while you're with us, I mean, to turn to this area of, I know you spend a lot of time working in the area of corporate risk and the whole area of audit and corporate governance. But I'd just like you to pick this up a little bit more and what your thoughts are in relation to this topic, and where you think it can be relevant from a Commonwealth context. Thank you.
Thank you very much, Arif, and thank you, Dr. Hilson. Some really, really great context providing there in terms of risk management, what it really is, because sometimes you kind of dismiss the fact that if you don't work in risk management, people just automatically know what we're talking about, and that's not always the case. And so thank you very much for that. So I guess I've been tasked with providing a view on dealing and improving our approach to things like strategic risk, financial and geopolitical risks, technology, governance, and regulatory risks. And as Arif has mentioned, my background is very much in the corporate world, and predominantly in insurance and financial services. I've been in insurance and risk management and internal audit for over 12 to 14 years. and seeing lots of various ways in which risk management is approached, both from the internal audit side, which provides a great view because it gives me that complete independent objective view of how the risk management teams themselves perceive risk management and what they should be doing, but also how management perceive risk. And also being a risk management practitioner myself, I've kind of seen how come organizations manage risk, if you like. So it's been quite interesting. So it'd be good to kind of share a few insights, I think, with you, and also kind of say that, you know, this is a really good opportunity, I think, for Commonwealth countries to really work together and maybe even leverage off some things that corporates do, definitely in the UK, but, you know, cross-connect across the borders as to how different corporations will manage risk and what you think of that. So I guess from a corporate perspective, definitely from an insurance and banking perspective, risk management, even though it's been around and like Dr. Hilson said, you know, everybody should be managing their risks. The actual concept of risk management is pretty new, and it became quite formalized, if you like, and more heightened as a topic when Solvency II in the insurance sector and Basel requirements in the banking sector were introduced and implemented by the regulators. So in insurance and in banking, predominantly the PRA and the FCA being the regulators. And it really got like corporates to think about what exactly is risk management and how do we do it. And what I've kind of seen across the years that I've worked in this area is that, you know, you started off, and it still is the case, it started off being quite siloed, where all of a sudden you'll see all these risk management functions springing up. You'll see this chief risk officer being, you know, put into organizations, not really sure exactly what he needs to be doing, he or she needs to be doing, but, you know, there as a title, managing the risk function. And then you had organizations where you have, you know, the management, the CEO and the C-suite running the organization, and you've got a risk management team somewhere on the side doing risk, which isn't exactly what risk is about. So I guess what for Solvency II and you know, the regulators wanted to see was risk was being embedded within the first line. It was being embedded within the management of the actual companies and the corporates, and risk management, and slowly the functions are evolving, were the ones to facilitate and support those risks being managed across the organizations, whether they be strategic risks, whether they be reputational, whether they be regulatory. It all has to sit with the management of the company, whether it be big or small, it's all going to be the same approach. And really, I mean, from a risk governance point of view, it's always got to be a top-down approach. So where you've got the people making the decisions at the top, you know, the boards, the senior management teams, they need to understand, and they are actually the only ones who can fully understand what the risks are in their company and their organizations. And so they need to be driving the risk agenda. And then it's for the risk management teams and the other assurance functions to be facilitating, to challenge those at those forums, to say, well, fine, we're taking these risks and we're understanding maybe what opportunities they might bring to you, but are we managing them? Have we got the right mitigation strategies in place, and what are they? And if we do have them, are they working? Because it's very, very easy to be sitting at the top somewhere, driving the agenda, trying to meet your business objectives and letting everybody else in the company manage your risks per se. However, not necessarily knowing whether those management techniques are actually working. So that's where the assurance will come in. So really, really important to make sure that we have good assurance providers to be able to do that for us. And that includes risk management, that includes compliance, that includes internal audit and external audit as well. So if we look at, you know, approaching some of strategic, economical risk and reputational risk, what approaches can we take? It's really, really important to make sure we've got the robust tools in place to be able to identify what risks are to our organizations. Also, and that usually will happen through discussions with the key stakeholders within the business. So if you're applying this to countries and the Commonwealth, it's about talking to the right people who do understand what the risks are within those Commonwealth organizations, and you know, making sure that we understand that where are we with managing that. And then it's also about making sure that we continue doing ongoing risk assessments, which, some organizations do well and others don't. It's about time, it's about resource, and it's about skill set and really understanding. So are we on an ongoing basis continuing to identify our risks, continuing to see whether they're being managed effectively, and continuing to, just as Dr. Hilson mentioned, horizon scan and see what the emerging risks are to our organizations or to our countries, for instance. Are there things that are happening in the macro environment that we are just dismissing because we're just too busy focusing on, on our given agenda? Very, very important to understand. And, what I've seen has really, really helped, especially at the board levels and the committee levels around risk governance, is facilitating training and workshops and those conversations, ongoing conversations, and keeping an eye on, like I said, horizon scanning, but also seeing whether have we got enough reserves in place, have we got enough buffers in place. In insurance and in banking, the regulators have required that enough capital provisions are retained for corporates to make sure that in the event they fail, or hopefully they don't fail, but in the event they do near to fail, they've got enough buffers to be able to keep running and provide the services to their stakeholders. And they're, again, primarily being policyholders for insurance, customers in the banking arena, and just making sure that the clients are the ones at the forefront of not being disadvantaged if an event were to occur. So we maintain the resilience, if you like, as an organization. And very, very interestingly enough, the COVID pandemic has been a massive test, I think, to all of this. Corporates have now been given, definitely, again, in the sectors that I'm talking about, the regulators are saying, we want to see that you are operationally resilient. We want to see that you have tested, you've applied scenarios and, really, really hard hit scenarios to your businesses. How is it going to impact your investments? How is it going to impact your balance sheets, your bottom line? Are you still going to be able to deliver what you're saying you're going to be able to deliver on? And if you apply that, again, if in a Commonwealth context, I think I say easily, but not necessarily easily. It's going to take a lot more time and a lot more effort and rods around the table. But I think you can also apply exactly that type of a framework, if you like, and that kind of thinking to really understand whether or not you are resilient when it comes to risks. And, stress and scenario testing cannot be underestimated. That's something, you're stressing your organization, you're kind of applying scenarios to it to understand what the actual impact is going to be to people, to finances, and generally your overall objectives. I guess I haven't got a huge amount of time left, but there's so much that can be said on this topic. But really, I think it's about learning and making sure also that the right information is provided. So one of the things that you often end up not seeing such great outputs on is management information for reporting purposes to help the decision makers. And it's really, really key not to get so over inundated into the detail when it comes to the information that you're providing to those decision makers, be it government bodies, be it boards of corporate companies. It has to be clear, it has to be concise, it has to be to the point, and it has to highlight what are the problem areas and how are we going to fix it. And do we have action plans in place? And that is something, sometimes, you will have presentations of reams and reams of information, and you might have, stakeholders around the table who will just nod their heads. And unfortunately, that isn't always a sign of showing that they understand it. It's really, really important to understand that information and how it's going to impact your organization or the entity or even like the country that you're representing. Is really, really important. So those are just some of the things and some of the approaches I think that we have to adopt when we're managing all these various areas, whether it be geopolitical risks and very much so with civil unrest on the cards at the moment, so much foreign tensions, if you like. It's really, really important to kind of understand that we have got mitigation strategies, and we have really thought about how a lot of these things will impact us and perform a forward-looking analysis instead of just sit back and be reactive. So I think that's very, very key. And I'm not going to be around, like Arif mentioned, for the later session. So I did want to just wrap up a little bit in just saying that hopefully some of what I've mentioned is useful. It's very, very very minute extract. It's a huge topic, and so I can't speak lots on it. But some of the things I think the CRC, so the Commonwealth Risk and Resilience Initiative, might be able to help with is hopefully, providing a platform to help design and develop some of the effective approaches to risk and resilience at a Commonwealth level in a clear, concise manner across boundaries and getting rid of those silos. But also to be able to share knowledge and best practice across various organizations and various countries in an impactful way. So hopefully, being able to leverage from the private sector and public institutions, and also, small and large organizations being able to develop various resilience frameworks in their international businesses. And finally, finding maybe a new way of highlighting new emerging and systemic risks, how we were talking about, able to achieve various, United Nations agenda in the pipeline, but also to be able to really improve in that area. And I know Robbie and Arif will pick up on this in a much broader scale than what I've just mentioned, but I just thought I'd mention some of the things that hopefully this initiative can provide. Thank you, Arif.
Nosheen, thank you very much for that, and thank you very much for bringing in the focus on corporate risk. And it's instructive actually to think that in terms of the regulatory landscape, we think of corporate governance, and the Cadbury Committee of 1991 is often seen as the kind of gold standard in this area. But in fact, if you look across the Commonwealth, the developments in South Africa with King 3 now, I think, or was it King 4? I'm not sure what stage they're at. King 3, the various iterations of corporate governance that they've brought out have really been world leading in corporate governance. And even countries like Pakistan, I think, in the World Bank awards, which they give for sort of progress in emerging markets, Pakistan was singled out for some of the work that they've been doing through their Institute of Corporate Governance. So there are some interesting models in the Commonwealth of where regulators, the Financial Reporting Council, I'm also thinking of their work, Nosheen, on risk reporting with the Knowledge Lab. There's some really interesting innovations that individually member states are taking, and yet they are not scaling, let alone sharing. And I think that is a point that sort of brings this conversation together a bit. But Robbie, I'd like to turn to you next, because you've really been a pioneer really in the work around Commonwealth disaster, with the Commonwealth Disaster Agency that you're involved in, and also your involvement in the Commonwealth Insurance Forum as well, which some of us have also been involved in. But over to you, Robbie, and I know that you've been extensively involved in a number of initiatives in the Commonwealth for a sustained period. So a warm welcome to you, to the Institute of Commonwealth Studies, and the floor is yours.
Oh, thank you very much. Can everybody hear me?
Yeah, perfectly. Yeah, thank you.
Oh, brilliant. Well, David, Nosheen, and I know Ekashe, as well as you, Arif, will explain everything incredibly well. And I've been listening to and nodding my head the whole time, listening to David and Nosheen, because what they're saying is really important. Perhaps I should begin by saying why I am here. And that's because I was fortunate enough in 1999 to be part of the World Bank task force with the Commonwealth Secretariat, looking at the sustainability of small states. And we continue to look at it many years later, which I thoroughly enjoy, and sometimes share in absolute horror some of the things the small states have to face. But in that time, we've been fortunate enough, and I was very lucky, because after the appalling tsunami of 2004, 2005, I was asked by the World Bank to come up with some ideas. And what ultimately we came up with was something which was adopted by the Caribbean Catastrophe Risk Insurance Facility, which has been extremely successful, as Ekashe is probably the best person to explain. But, and that was based on parametric triggers, and also developing away from what I would call the natural leaning on donor nation script. And this was then followed by the Pacific Catastrophe Risk Insurance of 2013, and also the African Risk Capacity. Now, what is very interesting is that each actually ends up by representing incredibly well the local issues. And indeed, the CCRIF at the moment is looking at the appalling problems faced now by St. Vincent and the volcanic explosion. And fortunately, or rather unfortunately, but as it happens, an earlier risk which took place was in Montserrat, where the volcano erupted in 95, 97. And so even as we speak, I know that countries like Barbados are talking to Montserrat about ash clouds and how to deal with them. And there are some advantages ultimately of ash clouds, but agriculture will only see that advantage in about 3 or 4 years' time. But what is interesting is Montserrat is a British, well, an overseas territories, as they're called now. And in the Caribbean Catastrophe Risk Program, there are in fact 6 overseas territories, as well as independent states. And everybody is beginning to share their information, share their risks, and understanding how to support each other financially, as well as in practical ways. The same is true of the Pacific Catastrophe Risk Insurance Program, and countries like Tonga have benefited recently from a payout on Cyclone Harold, where they gained $4.5 million to support them. And that also is a very good example of what is happening there. And then the African Risk Capacity is very much more concerned about drought and indeed flooding. And so there are differences of risks, but they all have to be addressed ultimately in the same way. And somewhere along the line, reinsurance programs will meet. Now, when we began the Commonwealth Disaster Management Agency in 2000, which I still am the director, our mantra was rescue, recover, rebuild. But actually recently, more than ever we would have thought, the really important measure now is resilience. And unfortunately, the pandemic, the COVID pandemic, has taught us this right across the Commonwealth. And yes, we've all been supported by wonderful programs like the Gavi COVAX AMC program, and indeed the African program as well, the African Vaccination Acquisition Task Team, AVAT. But that only goes so far and is subject to a lot of risk, as Dr. David was saying. And I'd like to add one of the great risks now is social media, because first of all, the COVAX program will only supply by grant aid up to about 20 to 30% of the vaccines required by every country, which is a signatory to it. The African or AVAT program is actually far better in its approach, except for one thing which has occurred this month, which was an absolute disaster in my mind and in my opinion, is that they suddenly withdrew 400 million vaccines of AstraZeneca from India. Now, they were influenced by social media and not actually by scientific provision. And that is a really unfortunate thing, because in fact, up until that point, they had 600 million COVAX vaccines, and they had 670 million including 400 million of AstraZeneca, for a combined population in Africa of 1.34 billion. So suddenly they're 400 million short. Now, that is one risk, and that affects people and affects ability of governments to perform. The other problem by doing that has been exacerbated slightly because India, sadly, is now going through a massive spike, and the government has rightly said to the Serum Institute, we need your vaccines for our own people first, just in the same way that America and Britain and European countries want to say. But by doing that, it slows down the supply to other countries who have already paid some deposit for their program. And then we have another problem, because under international law, medicines are protected and can be transported across the world and bought and sold by different countries, whether you like their political philosophies or economic policies, but they can still protect people on a humanitarian basis. But there is the problem of production, because the raw materials can be stopped from export, not the actual product it eventually happens to be. But if another country does not want to give you the raw materials to make the vaccines, then it's very difficult to then respond to everybody else's demand for your vaccine program. And then there's the efficacy threat, which is, I'm afraid, being played by the geopolitical threats, people of this world, because they keep on comparing what is a good vaccine and what is a bad vaccine. And actually, it is true that some of these vaccines have far less efficacy than their own governments were trying to show. But I'd like to just say something, and by the way, I do not represent any drug maker at all, but I would like to just bring everybody back to the first time we faced this kind of risk, and that was the Spanish flu in 1919, 1920. It actually took until 1947 to find the flu jab to give to civilian populations. That is a huge length of time. And actually, the COVID program has only been going for 2.5 years maximum. And a lot of vaccines have been produced in that time, and not much ill effect. Yes, sadly, people have died, but nobody ever compares it with the flu jabs everybody has. Now, in this country, for instance, in Britain, only 15 million people receive a flu jab every year, and certainly that was true of 2019. And there were 29 deaths recorded in 5 years because of the flu jab. 29 is actually the same volume of people who have been killed or apparently might have been affected, sadly to death, by the AstraZeneca. And in our country alone, more than 35 million people have been vaccinated. So the proportion of people very badly affected by the vaccines is actually very, very minimal compared to what social media tries to suggest. Now, one of the things we've been always worrying about in the Commonwealth Disaster Management Agency is actually the control of social media when it comes to moments of natural disaster. And we need to have in the Commonwealth, in my opinion, and perhaps organizations like the BBC World Service can help us to have a completely impartial service which tells people what to do in times of a disaster. And I say this because I've seen examples where people have been affected by earthquakes from one valley to another, and people are giving the wrong information to one valley from another because they don't know what they're really saying, and they're not listening to the people who are actually in that country are experienced enough to tell them how to prepare to do the next steps. So I think that is something we have to look at. Now, because of these issues, I have been working with some friends and business colleagues on creating a new global humanitarian impact fund, which may well end up as a bond. Because why? Many of the small states with whom I deal with frequently really do not have the money to maintain the purchasing power for buying vaccines for their countries. And this pandemic is not going to end this year, and it's going to go on for at least 2 more years. And actually, as we speak, nobody can actually tell you, unlike flu, whether it's a seasonal virus or not. It seems to be catching hold of people in different seasons all over the world. And so we have to prepare for that. And many of the small states have been very badly affected by, for instance, the inability to have tourism. And that doesn't allow them to build up their war chests to buy more vaccines. And this, on the other hand, may well help them. And other people may come, institutions, charity institutions, and private offices may well want to invest in a bond which has a 5-year level life. and will pay out on a coupon basis on the way. And I think that is something worthwhile to look at. And the other one, which we've been looking at, is pandemic insurance programs, which actually we have been talking with the Treasury in the United Kingdom about, and 1 or 2 other countries as well. Because here the Commonwealth is incredibly entwined, and people tend not to realize that the British logistic industry, such as aircraft, airlines, and tourist industry, rely incredibly heavily on the Caribbean logistics industries and tourism. And so if one falters, the other will falter. And that's why we need to have a pandemic insurance program, which actually responds to every element and end of an economic cycle. And again, we need to make sure that countries like in the Caribbean can easily join up with their own testing program. Why do I say that? Because if you're going to have cruise liners again in the Caribbean, and they stop off in 5 different states, islands, in any one journey, the governments of those islands need to know that they're protected against people bringing on to their islands a disease which they don't want, a virus that they don't want. And it needs to be able to be shown to the next island state that that is happening as well. So I think we need to make sure that the CARICOMs of this world can actually be wholly encouraged to do this. And I think they realize this, because sadly, St. Vincent's volcanic eruption rather demonstrated it the other day, because the cruise liners came to evacuate 16,000 people, but suddenly many of them couldn't come on board because either they hadn't been vaccinated or they didn't have the right testing. And of course, you might have to have a test which takes maybe a day, maybe 2 days to see whether you've got a positive or negative. Well, if you're evacuating an island because of a volcanic explosion, that is a pretty awful thing to have to face. And I think that's a risk which we can help overcome throughout the Commonwealth. In the same way that, also going back to the Pacific Islands, they have a particularly interesting problem because they are really huge maritime countries, and many of their people are, separated by hundreds of miles, and some of them have more advanced tourism, more advanced fishing than other islands, including their administrative islands. And the islands, or the atolls which are away from the administrative islands, have actually already said they're slightly nervous that when it comes to the supply of vaccines, that they will be equally distributed across the atolls. Now, we have to rely on organizations like the IFRC and NetHope to do that auditing, and I'm sure they can do it. But it's something we need to help people with and to give them the confidence. Another country, Palau, which is actually not part of the Commonwealth, has had to rely on Taiwan to quarantine in time if the Olympics take place in Tokyo, so that their athletes can actually participate, because there is no other way the islanders of Palau can find their way to a proper medical vaccination program. So, and in that area too, they are faced with a huge problem because Japan has until yesterday only inoculated 1% of its people. And suddenly all the major corporations are looking for vaccines. And I'm afraid to say the vaccines are now becoming very, very expensive to obtain from many of the small states. Now, I've probably overrun my time, so I apologize.
Robbie, thank you very much for that sort of masterful overview of some of the real risks and issues, particularly affecting small states that you've highlighted, and also very much to the minute in terms of some of the current realities that member states are experiencing, but also, as you've rightly highlighted, some of the real opportunities that lend themselves to much closer cooperation, coordination, not least because I think it's 32 of the 54 member states, the Commonwealth are small states, so there's a significant number of them in the Commonwealth. community. It gives me great pleasure to turn to our final speaker, and then after that we'll open the floor for discussions, and we're doing well on time. But I'm very pleased that we've been joined today by Accentuate Han, the Secretary General of the Insurance Development Forum. The Insurance Development Forum is a public-private partnership led by the insurance industry and supported by the World Bank and the United Nations, which aims to enhance the use of insurance to build greater resilience against disasters and to help achieve the United Nations Global 2030 agenda. I'm delighted that you're able to join us today, and really an opportunity for you to share with us some of the work that you do, and also very much interested in particularly the work you do in and across the Commonwealth. Kashir, the floor is yours. Thank you.
Thank you so much, Arif. I don't know if you can see my screen. Can you?
Very clearly, yes. Thank you.
Okay, great. No, so thank you so much for the opportunity. And I have to say, everything that has been said earlier also very much resonates with me. My experience has really been trying to work with governments to apply some of the risk management principles that David had spoken about earlier, to help them better manage their risks, and particularly governments where, insurance and risk management in that sense is not necessarily the standard. So I hope that through some of those experiences, which I will share a little bit about, we can begin to think, how do we maybe help to improve the support to Commonwealth countries on this front? So as was mentioned, the Insurance Development Forum as an institution, we try to look at this from the lens of the protection gap. And I'm sure that most of you on the call are very much aware of what we're referring to when we talk about the protection gap. This is essentially the difference between economic losses caused by disasters and the amount of those losses covered by insurance coverage. And so some might ask, why is this even important, right? And the reason is important is because ultimately when these disasters do occur, and there is no protection for people, or governments are left significantly exposed, the impacts have to be absorbed by individuals. It means poor people pulling children out of school in order to cope with these disasters. It also means governments, importantly, diverting development funding towards response and recovery. And this is just not sustainable. So I think all of you are well aware of the work that the insurance industry does. Every year, a number of the big corporations put out statistics in terms of what we are seeing as it relates to the protection gap. And what is alarming is that this gap continues to expand. We've all are going through the COVID-19 pandemic, and I'm sure we can all agree that what that has revealed is a significant gap and real deficiencies that exist within our systems. And so this slide is really a reflection of some key statistics when we talk about the protection gap and what it means globally. Obviously, $162.5 billion is the size of the insurance protection gap, approximately. But we also know that it exists a context where in most developing countries, you have an insurance penetration rate of 1%. So that, I think, tells you a lot in terms of the context that we're dealing with. And again, when we think about Commonwealth countries, I think that the principle holds, usually between 1% to 3% when we talk about insurance penetration rates. So what is the IDF and how does the IDF come into play in all of this? The IDF was established, as Arif had mentioned, in 2015, were launched formally in 2015 as a public-private partnership led by the insurance industry, but co-chaired with the World Bank and the United Nations, with a clear focus on how do we expand the use of insurance and related risk management capabilities to help enhance resilience of communities, businesses, governments, etc. And clearly with COVID-19, that makes our mandate even more urgent. And we've seen it translate into the work that we are doing and the level of engagement that we have with countries. But more tangibly, what does this mean for us? It means operationally that we are very much aligned to the G7 and the G20 objective to have 500 million people, vulnerable people, covered by insurance by 2025 or offered protection. So our work within the IDF is how do we get industry, players who traditionally would not necessarily cooperate, to actually work together, and also with our public sector counterparts. For example, the World Bank and the United Nations, who already do quite a lot with governments, particularly developing countries, emerging market governments around their development agendas. So how do we do this? Is to try to create a platform where these entities can engage with each other, share best practice, can collaborate where, say, in a particular country, they have joint programs, they have programs ongoing or discussions ongoing with the governments to try to bring the conversations together. And this is really important, just reflecting on the comments by David earlier, which is our efforts should be geared towards how do we work with governments to strengthen their understanding of risk, so that the government has a very clear picture of what this is and begins to develop a comprehensive approach in terms of trying to address it. And so we are very much guided by principles in terms of we're open, participatory, and inclusive and transparent in our activities. Just to give you a sense of the IDF itself, I think, as you would see, it's chaired by Denis Duverne, who is the chairman of AXA, but co-chaired by Hiroshi Matano, who is the CEO of MIGA, as well as Akim Stein of UNDP. And most of the major international insurance companies are members of the IDF, but also sitting alongside entities like UNDP, UNDRR, UN OCHA when we talk about humanitarian activities, but also GIFIA, which is the Global Federation of Insurance Associations, and also the Bank of England and the German government, because we firmly believe in the principle that this is not something that one institution can tackle. But again, what areas do we want to focus on? There are many things that we could be doing, right? But we have essentially identified 5 areas within the IDF which we feel are particularly important. The first one I would touch on is risk modeling. So I think it's often taken for granted when we talk about an understanding of risk, what actually is on the ground in many of these countries that we're dealing with. And so our working group is really focused on how do we improve the availability and the quality of risk information to support decision-making. And for us, this translates into the first pillar is, can we support or help to improve the infrastructure that would allow for improving the availability of risk information? And so that means we advocate for open risk modeling standards and certain approaches which we believe will allow governments to be able to share information better and to help to build a more cohesive view of what that risk is. The second element of our risk modeling approach is also really geared towards working with our public sector counterparts to establish some kind of funding mechanism where governments can actually tap into these resources to help develop their own risk functions. I think that it is important that as we talk about risk, there's a lot that international institutions can do, but ultimately those risks are local. And you need the local knowledge, the development of local risk management capacity to actually translate that into meaningful decision-making processes within government. And so for us, this is a major pillar of our risk modeling working group. Another area that we focus on is on law, regulation, and resilience policies, again, reflecting on the fact that if we talk about the protection gap, the need to enhance and build insurance markets to help take on some of the liability and the exposures that governments, individuals, etc. have, we also have to deal with the regulatory environment that supports that. And in many countries, the regulatory environment isn't necessarily keeping pace with the kind of remarkable transformation that we are seeing within the insurance industry. Robbie touched on parametric insurance, and when it was introduced in the Caribbean, when we launched the Caribbean Risk Pool, there was a lot of work that we had to do with the insurance regulatory community in the Caribbean so that they could understand what are these developments when we talk about parametric insurance. Is it insurance? Is it not insurance? How do we deal with it, right? And it's the same thing that we saw when we launched the African risk capacity. But it extends beyond the insurance regulatory domain to resilience policies. How do our policies, when we talk about resilience, what do they look like at a national level, right? Do they really speak to what it means when we talk about strengthening resilience within governments? And what is the convergence between, say, what we're talking about in terms of our financial economic aspirations and where we should be going in terms of a resilient country? And so that is what that working group focuses on. But another element that is a real key pillar of the IDF is that we don't just want to talk about these things. Many of our governments, many of our communities, businesses, we've seen the impact of COVID, are also very desperate for real financing solutions, right? And this is where there's a need to actually create platforms where, again, governments, different sub-sovereign entities can engage with the insurance entity, can engage with a community that can help them to tackle these issues and begin to develop new innovative solutions. And when we talk about risk, I think that one of the things that is really, in my opinion, and I think echoing some of what David said, is the opportunity that's also presented, the opportunity for innovation, the opportunity for new things to emerge when you have non-traditional communities actually coming together to talk about a particular problem. And so within the IDF, there are 2 working groups that focused purely on transactions and really helping to develop the kinds of solutions that are needed. One is the Sovereign and Humanitarian Working Group, obviously working with governments directly, and the other is the Inclusive Insurance Working Group. So again, more at the micro level, and trying to see how we can support the development or the scaling up of insurance solutions, if we're talking about SMEs, individual kind of solutions, etc. And then finally, we have a working group which is focused on investments. And so again, looking at insurers, not only in terms of their core value proposition as underwriters, but also on the investment side, and how we can help to encourage greater investment in resilient infrastructure. So hopefully this gives you a sense of the IDF and what we're focused on. So one of the things that we've seen globally, and again, reflecting what was said earlier, is that we're seeing a lot more governments open to the idea of how can we use insurance to help them address some of the significant impacts that they're seeing, if it's from droughts, floods, etc. And so there's been, I think, sort of a proliferation or a real dramatic growth in terms of governments who are actively exploring these kinds of insurance solutions, not only in the Caribbean, in Africa, but also in Asia. And so this slide gives you a perspective in terms of some of these innovative initiatives that are really emerging right around the globe. But we know that this is a complex process in terms of making these problems material so that they can be insurable. And again, this is a case of flood risk in Ghana, where when we started to engage the government, it wasn't just simply about, okay, what is an insurance cover? You actually have to work towards trying to understand what is do we have information in terms of historical loss data in Accra, right? We have a situation where there's a outdated public assets registry, and this is not the case for only Ghana. This is the case that we see in many countries. So there's concerted investment that's needed in how do we update public assets registry? How do we improve the availability of hazard and exposure information? How do we work with governments to undertake a cost-benefit analysis in terms of their investments in risk reduction and also risk transfer options that might be available to them? But this is all part of the process of understanding the risk, but also trying to make it more material in terms of how do you proactively manage it. And so, again, this is just a slide to indicate, based on the challenges that we've seen working with many of the governments right around the world, there is a recognition that, as I said earlier, it's not something that one institution can do. And so in 2019, during the UN Secretary General's Climate Action Summit, we launched a partnership with the United Nations Development Programme, as well as the German Ministry of Economic Cooperation, to launch a program of technical assistance for 20 countries by 2025, with the objective of really helping these governments to tease out what are the risks that they face, but also help them to try to design and develop the kind of risk financing solutions that are needed. And we thought that such a partnership was critical because you had an institution like the UNDP that is engaged with governments around their development of their national adaptation plans. Really, our focus was to support them to say, how are those efforts that they're engaging with governments really treating to risk management, right? How are they treating to insurance and risk financing? Can we mainstream some of those concepts as they engage with governments? The German government obviously providing resources to help the deployment of this technical assistance program. And the IDF insurance members committing not only support in terms of the risk modeling, but also working with the governments in terms of their risk financing needs, and also a co-investment with BMZ when we talk about, okay, leveraging the resources and capacities of each other, as well as offered $5 billion in risk capacity for those governments that eventually get to a point where they might want to transfer a portion of that risk. I'll skip this slide just because time constraints, but to give you a sense of the kind of projects that we work on. And although it's not a Commonwealth country. I hope that it gives you a sense of materially what we are trying to achieve in our engagements with governments directly. And so in Peru, the challenge here was that the government in 2017 had gone through the El Nino and had faced significant floods and significant damage to public schools. And so they approached the IDF with the objective of, can they work with us? And this was the Ministry of Finance as well as the Ministry of Education, to help them structure an insurance program to cover 50,000 public schools. And this was driven by the desire to say, okay, when we do have a future event, can we find a way to finance the reconstruction of these schools quite quickly? But beyond that, also based on an appreciation that if critical assets like schools are down, there's a ripple effect in terms of children not having access to education, and also the pressure placed on households. And so the project that we designed with the government of Peru was not only about understanding the risk and structuring the solution, but working with them right through the process of how can we structure an efficient claims management system that would allow for the flow of funds to go not only from the insurer, if you have an event and it's triggered, to the government, but right through to the reconstruction phase. And part of that was also the development of an asset database of those schools. So what do those schools look like in terms of the buildings, the quality of the infrastructure, and basically the government having a repository of information that they could draw on, not only for insurance purposes, but also for broader risk management purposes. And the idea is that this can then be built out to look at other critical assets. And one of the things that we've also done is the development of a paper, which is a practical guide to insuring public assets. So really offering governments a step-by-step view of what they should be thinking about if they are seeking to insure their public assets. And this is something that the World Bank, as well as the Inter-American Development Bank and the Asian Development Bank, are now starting to actively use in their engagement with governments. But hopefully that gives you a sense of the kinds of projects that we are dealing with. But I thought it would be important to perhaps also offer 4 reflection points as we think about how do we engage with Commonwealth countries. The first is COVID-19 will see a 40% spike in terms of the number of people needing humanitarian assistance. It will push 150 million people into extreme poverty this year alone. 1 in 33 people will need humanitarian assistance. And what we've seen from the COVID-19 response, based on some research that has been done over the past year, is that only 2% of funding that has been triggered to help countries was actually funding that was predefined or allocated before the disaster had occurred. And for us, this is a situation that simply isn't tenable. So I hope it offers some perspective in terms of when we think about Commonwealth countries, the risks that they're exposed to, and also what we need to do in terms of supporting them to have better financing architecture, better strengthened understanding of this risk, is hopefully we can begin to craft opportunities for collaboration where we can help them in terms of deepening that understanding, but also help the financing element, because I think that that has to be central if we are talking about resilience. So I will stop here for now, but I hope that it has been useful in terms of the insights, experiences, and perspectives from the IDF and where we think that we can contribute. So thank you very much, Arif.
Thank you very much, Akashe. And I think, the emphasis that came through very strongly from what you've outlined in terms of sort of multi-stakeholder partnerships, and also trying to, bring clearly more collaboration, but more cohesion into the approach is very powerful. I think, again, some really powerful examples, and clearly very resonant and relevant in a Commonwealth context. So we have, I know there's been quite a lot of interest in this session, so this session is being recorded and will be made available later, but we do have some people with us now. So I'd like to open the floor for any comments or questions, and then what we'll do is we'll see how that goes, but we have a kind of another round to come back on where we can begin to pick up some of this in more practical ways in terms of the discussion. And thanks very much for putting that in that direction, Ikashe, as well. So does anybody have any comments or observations from the floor? Please, Nicholas. You just want to introduce yourself, Nicholas, as you. I'm sure
yes, I'm Nicholas Watts. I'm a fellow, another fellow of the Institute of Commonwealth Studies. I also chair the Independent Forum of Commonwealth Organizations, which are the sort of professional and voluntary and civil society organizations. And I just wonder, we hear a lot about the Commonwealth advantage in trade. Is there a Commonwealth advantage in insurance? I'm just thinking of a bit like joint procurement. Is there a way of countries on a regional basis joining together to seek insurance? That's one question. Another is about risk data, and we're very concerned to find out about sources of data across lots of fields in the Commonwealth. And is there a Commonwealth specific data source for exposure to particular risks? Because we know that small island states are desperately exposed to both to sea level rise, to extreme weather events and so on. And a more concrete question is, I thought there was a Commonwealth initiative on Malta to do with insurance and risk management, and that was mentioned in 2015 at the Malta CHOGM. And I don't know if Robert may have information on that, or it may be him. I don't know.
Well, actually, thank you very much for asking. If that's right, Harry, I will comment on that.
Sure.
The Malta initiative actually was slowed down a little. But what I can tell you, first of all, there is now the Commonwealth Risk Finance portal, which you can look up, which will then lead anybody into seeing what the Commonwealth can do to help in disaster risk insurance and finance programs overall. Then about 2 years ago, I was fortunate enough to be one of the founders of the Commonwealth Insurance Forum. And we've sort of started to get going, and we're working alongside the Commonwealth Enterprise and Investment Council and the Chartered Insurance Institute, which is obviously based in London. And we are setting up a series of podcasts, and we've got one session which we are designing at the moment for CHOGM, for the Kigali meeting. But what you've said is absolutely right. And that's one of the reasons why we wanted to make sure everybody was aware that actually insurance is available for everybody at every level. And I think the Commonwealth Insurance Forum will help to allow people to understand that. So thank you for mentioning that. It will allow me to give a good plug.
Thank you.
Is there an advantage? Is there a Commonwealth advantage? I don't know whether you want to pick that up, Robbie, or Ikeshe, or...
Well, there is, actually, funnily enough, like all these things, statistics can be used for every argument you want. And the extraordinary thing about the arguments, and I'm not a Brexiteer or I'm not a romantic EU person here, but actually only 8% of all insurance premiums which land in Britain, in London in particular, come from the EU. And actually 40% comes from the Commonwealth, which is probably something which most people don't realize. And it is a huge percentage. And we do have an enormous number of members of the G7 and G20 in the Commonwealth. And this is what we're trying to harness. And we now have wonderful hubs like Singapore for insurance, which are really developing at a very fast pace. In fact, I would say more than developing, they're developed. And the same goes for Bermuda. So, and I suppose we're lucky because the great alphabet conglomerates, Aon, Marsh, and the broking world, do run along parallel lines with some of the bigger insurance companies. So whereas, I remember the old days we'd have to do global umbrella covers, which would be very irksome and almost Heath Robinson and style. Now you can insure all sorts of risks, especially liability insurance programs, which are very necessary, like motor cars and things, actually in the territory in which you're insuring. You don't have to go outside except for reinsurance. So from that angle, it is united and is developing even further. But Ikeshe is incredibly knowledgeable and competent about how all this is developing. And she had a wonderful time at the Caribbean Catastrophe Fund, and now is bringing all that to the IDF, which I think people haven't really heard of, and I hope they will hear more of outside the insurance industry. It's really important these institutions are known from outside rather than just inside.
So thank you very much, Robert. I agree with you completely. And because it is challenging, right? In the sense that from my experience, I'm not an industry person, but I worked in the Caribbean, I worked in Africa, and it was clear to me when we have droughts, when we have tropical cyclones, when we have earthquakes, governments were struggling, people were struggling, but yet there wasn't that connection being made between, these risk management principles that we're talking about and really working with government proactively to distill that in terms of what does it mean for you as a government in terms of drought risk, right? What does it mean in terms of your deferred development aspirations? But increasingly, we are seeing a lot of traction with our co-chairs, our members. So for example, the World Bank, the IMF, and others. And funny enough, on the 7th and 8th of June, we have the IDF Day. And we will have not only the UN Secretary General, David Malpass, President of the World Bank, Kristalina Georgieva, sitting for the very first time around the table with CEOs from industry, as well as the head of the UNDP and others, to really begin to address this issue of how do we help governments, right? Because there is a limit in terms of what these international finance institutions can also see, and debt crisis that many countries are faced with. And so this is really our efforts to begin to steer that conversation around how can we leverage what it is that the insurance industry can bring to the table to support this development aspiration that we all have. So I hope, again, talking about plugs, that all of you will be able to join. But I will go back to the first question, which I think Nicholas raised, which was, is there a way for countries to seek insurance? And so to that point, what we saw in the Caribbean and also what we saw in Africa was a movement in that direction, where you had governments that in the Caribbean, there was a challenge in terms of accessing the markets, right? Often too small. One of the big challenges also was that for some of these governments, they were too rich to access the typical humanitarian financing, but not big enough to access the markets, right? And so part of the innovation around that was, can they pool their risk into a single portfolio in order to access insurance markets at much more competitive rates, and also save in terms of the bureaucratic and administrative costs associated with this, but also leveraging again the parametric dimension, which would allow for faster payouts, right? So we saw that emerge in the Caribbean. And then subsequently, we saw countries in the Pacific, also driven by support from the World Bank, and also in Africa, looking at how do we build on that experience, but making it tailored to the specific context that we are dealing with. And so in Africa, what we saw was that governments were more interested in drought risk, right? The significant events that you saw in Kenya, East Africa, Southern Africa, West Africa. And so again, it was building on the experience of the Caribbean, but doing the technical work to distill what drought risk means for those governments. But an added element that we built in was proactively trying to link the insurance with the scale up of social safety net programs or humanitarian response activities. And again, this required quite a lot of collaboration and work to get it going in terms of working with the governments, but also translating that down through to the operations. But we're increasingly seeing a trend towards and an appetite within governments in terms of really looking at regional approaches, multi-country approaches. But ultimately, there still needs to be a national ownership of that risk. And within the governments themselves, one of the things that we have been advocating is for governments to actually have those departments established to own that risk and to guide. And oftentimes that simply just does not exist. And you have a very ad hoc situation in many countries. But the insurance conversation often is able to catalyze the establishment of these units. But I'll stop there. I hope it's useful in terms of the trends that we're seeing.
Thank you.
Any other questions? Yes, Bala. You're on mute, Bala. If you want to unmute yourself and also just introduce yourself. Thank you. We still can't hear you, Bala, for some reason. I'm not quite sure why, but.
Yeah.
I'm not quite sure. Yes, we're not hearing you for some reason, but I'm not quite sure why. Maybe while we're waiting, we'll move on, and then maybe if you can just keep trying, or maybe if necessary, you can always post your question in chat. But I mean, if nobody has any further questions, I mean, one of the things we wanted to turn to in the sort of the next two parts of the session, we'll be finishing no later than 6 and perhaps even before, and we've already started talking about this, because you've kind of steered us in that direction, is really thinking about some of these enabling mechanisms. And I know, David, you've been quite active, of course, in the Institute of Risk Management, and there are others. We have professional bodies. But in terms of the Commonwealth itself, we have, of course, the Commonwealth Heads of Government meeting and all of the machinery, if you like, around that. Indeed, I think, Nicholas, we also have the Commonwealth professional organizations. I think most recently accredited was the Institute of Occupational and Safety and Health, the IOSH. So we have, a range of Commonwealth organizations, and of course, they cover, the professions, lawyers and others, and accountants. So I just wanted to turn the conversation to that and ask really what people's thoughts are on that. But before I do so, I'm just going to share one slide with you. So if I share screen now, hopefully this will work seamlessly. And I'm just going to pull up there. You can see hopefully on the screen.
Yes.
So this is one of the initiatives that came out recently from CHOGM. I mean, recently 2018. So Prime Minister Theresa May, who was the incoming chair of the Commonwealth, talked about the establishment of the Commonwealth Standards Network, providing a significant opportunity, and I quote, for national standards experts to collaborate and share best practice, and it'll empower developing countries to have a stronger voice in the international standards community, something that has benefits on a global scale. Well, interestingly, it's taken the ISO, the International Standards Organization, about, I don't know how many years, 100 odd years to get to the 130 members. It's taken Commonwealth countries, all 54 of them practically, less than 36 months to get to every member state being part of this network. And what they've done in this period, they have tackled a number of outputs, in the words of the UK government, quote, to tackle non-tariff trade barriers by increasing awareness and adoption of international standards. They developed an online platform, collaboration between national standards bodies throughout the Commonwealth. They've also developed written resources, a framework of existing international standards for use across the Commonwealth, and they've also provided support, training and workshops across the Commonwealth as well. And to bring this right up to date, Nicholas, I know you'll appreciate this. Just a week ago, I was in a conversation with the airport manager of St. Lucia, who was telling me that he had been involved in the standards body for St. Lucia and had been a direct beneficiary of this very initiative, the Commonwealth Standards Network. And, of course, in a country like St. Lucia, he was talking to me about the crucial role that standards bodies play in providing opportunities, particularly for countries that have a very narrow export basket, that are perhaps overly dependent on commodities, are very vulnerable because of their location to natural weather catastrophes, all of those kinds of things. And the importance of standards, I think, is sometimes underestimated, but a really good example. Now, the standards, of course, are not the answer to everything, but I think that's just another lever. So the Commonwealth Standards Network is currently the recipient of UK government funding, I think, for about another year, but they've built up significant traction already. And they are currently project management outside of BSI. But I'd just like to ask people, I'll stop sharing now actually, but I'd just like to ask people to address this point. And I mean, as we close, Robbie and I will come in with some specific thoughts around from the Commonwealth Risk and Resilience Initiative about very practical things that the Commonwealth could do. That won't take us more than 5 to 10 minutes at the most to cover. But before we get to that, I'd be very interested to hear people's ideas around, for want of a better label, enabling mechanisms, whether they're big meetings like, in fact, some of the ones that you were talking about as well, where people come together, the business community and stakeholders, whether it's some of the Commonwealth stakeholders. I mean, Nicholas, you talked about the Independent Forum of Commonwealth Organisations, whether they're the professional organisations, David, that I know you've had exposure to as well, or whether there are other stakeholders, perhaps in the insurance industry or the sector. I'd like to ask that question to all of you with a particular orientation to the Commonwealth. And are there, if you like, these enabling mechanisms that we should perhaps be thinking about in this context of providing a more joined up approach? Any thoughts or responses? Yes, Bala, please come in if you're able to. Oh, I think we've still got the same problem, Bala, I'm afraid. It's without voice.
Okay.
So maybe while we're still waiting, but please, actually, did you want to come in or someone else? Or
okay, maybe I'll come in with some some reflections.
Yeah.
So for us, as I mentioned, in the risk modeling working group, standards are important.
Yeah.
One of the challenges that we've seen with our work is that oftentimes, and why it is good to have, you know, these different institutions at the table working with governments, is that oftentimes when we engage with these governments, or say there's a particular project in a country that's focused on, say, tropical cyclone risk. There's a tender that goes out, you know, there's a firm that does this work. Often the model that is built is proprietary in nature. The governments only have the end view of what that is. They're not really allowed to interrogate that information or to own it ultimately, right? And so one of the things that we've been advocating for is really a shift from that approach, because it is not cost efficient. Every time a government has a question on a risk financing solution or a risk management question, we go through a process of a tender and new models are built. It just is not positive, right? And so one of the things that we are really trying to advocate is really a different approach, where the industry itself is moving in a direction where a number of companies around the IDF have invested heavily in what is called the OASIS platform, which has certain standards in terms of data quality, you know, et cetera, the kinds of information that insurers themselves need in order to be able to understand that risk and ultimately price it, right? And so one of the things that we've been encouraging in our engagements with our public sector counterparts is really establishing those base standards that would allow for those governments to have and own that information, right? And to be able to build up that capacity in a much more efficient way. And so for us, I think that that is really important, because it is not only about what the insurance industry can provide as a solution, but it's ultimately how can you help governments to strengthen their own information database. And this is not only, this issue of standards is also linked to the other pillar that I'd mentioned, which is helping governments access financing so that they can actually have staff
Yes, right.
within governments who are responsible and accountable for this, right?
Yeah.
And that's not an easy task. And I think that the Commonwealth can play such a powerful role in terms of, and I'm sure that the institution has a legacy of that, but really driving that forward, especially now, because I think that despite the impact of COVID, it's an opportunity. Because governments are a lot more aware and sensitive to risks, right?
Yeah,
and
sure.
more than ever, they're trying to find out, how can I actually improve? What do I actually need to do?
Yeah.
And that for me is really what the Commonwealth, an area that Commonwealth can, you know, really capture at this moment.
Yeah, no, really, really helpful. Can I, and you're right about the timing. I mean, certainly there is an immediacy to this, which is very real and very apparent. David, can I ask you to come in perhaps on this point about professional bodies, or even on your broader international experience, where you've seen countries in terms of their approach to risk management, perhaps? What have you found to be the stronger, if you like, enabling mechanisms that I'm referring to?
Yes, well, let me just first of all comment on what Ekesho said about the constant development of or reinventing the wheel on modeling. And I think it might be helpful to see if you could find a kind of generic sponsor who could develop a generic model that would be, common ownership, if we like. And I think certainly some of the professional bodies might be able to do that. The Institute of Risk Management, for a start, has specific interest groups, one of which could be tasked with developing a generic open access model that could then be tailored to specific applications by different countries. And the idea being that if you supply the data, obviously you own the data, and therefore you own the specific instantiated model that comes from the generic core. So that might be a possibility. And if the institute won't do it, then the other option might be one of the universities. And perhaps as we're hosted, today, maybe University of London or UCL or somebody might take that on as as a function to create a generic model that could then be instantiated by governments, and through provision of the data, then creating ownership of the specific model that results. And I think those two avenues might well be worth exploring, either the professional institutions or the universities. And then I don't know whether there are universities that have specific links to the institutes. Arif?
Well, we have, in terms of university landscape, and Nicholas, you'll also very well, we have the Association of Commonwealth Universities.
Of course.
And that does provide at least this community of 550 universities, which I think the most useful thing about it is that it does have a footprint right across the Commonwealth. From, I know we could say you're a UE graduate, so University of West Indies right across to the Pacific and everywhere between, including, of course, University of London. They don't have programs in this area, although in fact, one thing that they do have, and Robbie, you may be involved or aware, they do have a climate resilience network. Nicholas, you may have had some awareness of that.
Yes, there's a very good one at UCL, in fact.
Yeah,
which is actually sponsored by many of the leading players in the insurance industry.
Yeah. So there's the UCL disaster reduction there, but I think also the Association of Commonwealth Universities, they've kind of brought together different universities, I think, around a kind of exchange, knowledge sharing network on climate resilience, I think. So I think you're right, David. I think those networks do exist. I wondered, Nicholas, whether, if
Can I just come back on that just before we
please,
change the subject? So then in New Zealand, there is an outfit called Resilient Organisations, which is a collaboration between universities and industry, which again, they may well look to the possibility of developing a generic model. But then to answer your specific question about things that, in terms of countries that might contribute to resilience, I think the key thing that I've discovered, and I've worked quite widely across Africa, that's been one of my focus areas, is to have a proper understanding of the place of the understanding of risk in the culture, the national culture. And I think it's so varied on all sorts of different elements. But I think once you can tap into that and to use, everyone will have a view of risk within their national cultural characteristics. But once you understand where that comes from and how you link that into the intended outcome, I think that's a very powerful way. And it needn't be academic. I think this is a very practical way. Those of us who understand the countries that we work in, and clearly the Commonwealth, that's one of your great strengths. Then I think to hook it into national culture is a way to actually gain that sort of buy-in and ownership that we need from the governments locally, so that it's not seen as something which is imposed from outside, which has perhaps a Western view or a northern developed industrialized view, but which is much more built into the way that we think in our particular country. And I think that's a very important angle to consider.
I would echo that completely, because when we were looking to establish the ARC model in Africa, we had the base model, right? But then the governments actually customized the model, right? Based on their own, as was said, specific context. But then that customization was also really important because it informed what am I willing to absorb? What risk am I willing to absorb? And how am I dealing with that risk that I am absorbing? And the risk that I have to transfer, what is that going to cost me? And how do I tap into efficiencies? And you cannot have these conversations and these decisions and trade-offs and ownership without really meeting the communities, in a conversation around risk. The other point that I wanted to make was that there is actually the global earthquake model, which again, the industry has invested heavily in. And this offers broad global information as it relates to earthquake risk, but again, can be further refined. And I think that it's its base is in somewhere in Italy, again affiliated with a university. I'm not sure.
Yes.
Yeah, but there are these models that I think that could be quite instructive.
Alan, do you want to come back in? I'm not sure whether you're. Oh, right. We have, well, risk and opportunity, but I think there's too much of risk, I think, Bala, for some reason. I'm not quite
Bala
sure.
has his question in the chat area.
Let's have yep, I'll bring it up over here. So, yeah, so this question around the Bala was referring to an article in the Roundtable, which is the Commonwealth Journal of International Affairs, recently on 2018, where he argues for the establishment of a Commonwealth Broadcasting Corporation for building a Commonwealth-wide identity, and how such an initiative could be useful for providing reliable information, or a Commonwealth Development Bank. Can such a bank help with covering risk, and can the panel comment? There's certainly been talk about closer cooperation, you know, in terms of financial level. And in fact, one of the more interesting things is there's been a meeting of trade ministers too, in fact, in the last 3 years or so, or they haven't met for many, many decades. So there's certainly greater coordination happening. But I don't know whether anybody wants to comment specifically on either of those 2 points around Commonwealth Development Bank, or the other point that was mentioned. I mean, certainly it's an area that I think is you know, does get talked about. I think the finance ministers, in fact, it's a very relevant point, Ikeshe, because the Commonwealth Finance Ministers is one of the most regular ministerials. Yes. You know, of course, meets every year on the just immediately before the World Bank September meetings or October meetings, and that actually, you know, I'm sure would be another. Even like enabling mechanism or community through which to engage broader stakeholders, a number of whom, as you say, are already working with IDF, but can certainly work with others. I mean, universities was talked about, professional bodies were talked about, I think national organizations. Nicholas, can I don't want to put you on the spot, but do you think that I mean, IFCO is a very broad community of different organizations, but we do have quite a cluster of particularly organizations that are professional bodies. You know, we have town planners and architects and others, and of course they do have a particular understanding of risk in their own professional context, but yet I don't think they ever do any joined up talking about it in the Commonwealth. Do you think that there is value in that approach?
I've seen a lot of value in this discussion today, so yeah. I think, you know, it might be time to kick something off. I mean, I have a very exploratory question, but I'll hold back for a minute. Now, I think because we do have, I think there's one new member that's around insurance, and we could maybe explore with them. But is there room for another question?
Yeah, sure. Please do come in, Nicholas. Yep.
Because, and this is an exploratory one, but speakers mentioned debt, and I'm interested in Guyana's plan for a green recovery, and we're all talking about the green post-COVID recovery. And of course, Guyana has just discovered oil, and there's a certain sort of risk involved. We saw Mozambique found oil, borrowed a lot of money from China when the oil price was high. The oil price has gone down. Mozambique's moved from having its debt cancelled to being indebted to China now. How would colleagues approach, or would they even approach, advising Guyana's government of the risks and opportunities of investing or engaging in oil to get out of a real poverty trap, but then getting into the climate, you know, being viewed negatively on climate, although I think we'd all agree that very poor countries need to develop before they start engaging in mitigation. But I'm thinking in terms of things like the risks of divestment and whether long-term the Guyana can go down this route.
I mean, the risk and opportunity conundrum, isn't it, really, David? That, you know, you have this risk, but then there's the challenge. Does anybody? I mean, also there was a case. It was in Papua New Guinea that also had, you know, discoveries of natural resources. I think it was Mark Malloch Brown when he was in the UN. I remember him speaking at Chatham House many years ago and saying that an African minister has just told me they've discovered oil, and it's a curse, the minister was telling it. So I think there is sometimes a mixed blessing, even from governments, when they realize that, unfortunately, perhaps, although it can be a boon for revenue, in fact, in the longer term or wider dimensions can be problematic. Does anybody want to comment on that? I don't know, Robbie, if you have any observations.
Well, the only thing is, if you allow people to do this, and of course oil is still necessary in many parts of the world and for different products, not just for driving logistics, but maybe one should always say that if you want to have it, the license is that a tax has a return for future environmental issues.
Yeah.
And I think that's the way around it. You can't tell a country you can't do this and you can't do that. That you would have uproar in the United Nations.
Yeah.
And you can't, and it is right. We have to allow people to leave what we call comparative poverty lines. And this is unfortunately a very quick way of doing it. But I think they should be told if they do it, they have to have self-tax, like in an escrow account, so that the money is there to help the environment when they're making sizable profits.
Yeah, the other interesting piece of advice then would be not, as Robbie says, not to limit your exploitation to fuel, but if you actually took the opportunity of a new technology implementation, and obviously oil can be used in all sorts of different ways creatively, and then if there was an investment in terms of innovation and technology to create something that was more green from the oil, then you would end up with something that wasn't polluting and didn't actually give you a climate downside.
Yes, I mean, I think in particular the Norwegian and Swedish sovereign funds are very good at that, and they've been incredibly helpful actually in Africa. So there's no reason why they shouldn't be persuaded to help Ghana as well.
Yeah, Ghana as well. Yeah, Robbie, I'm going to ask you, and maybe you and mine, in the last session before we sort of close, because I mean the Commonwealth Risk and Resilience initiative. We've been having a number of discussions in the last 2 or 3 years now. And we've got some initial thoughts, but do you want to kick off, Robbie, with some initial ideas that we had? I mean,
Well, I was going to help. I was going to help you if you led off.
Okay, sure. Well, let me kick off. Yeah, I mean, I think there are a few, and I'm not going to, in the interest of time, we'll only spend 5 to 8 minutes on these. But essentially, I mean, I think David, you're absolutely right. And in fact, Ikushi, you mentioned the Sendai framework for disaster risk reduction, and yet nobody's ever heard of it in higher education. I mean, outside of your traditional courses, in your traditional, and I teach business, most business courses never mention it, and yet it's such a core thing that countries need to be thinking about. So there is something there about supporting and strengthening higher education engagement in the SDGs for sure, that they are getting more involved in, but in particular the disaster risk reduction framework, Ekushir, that you talked about. And I think the UN has got a lot better, the UN disaster risk reduction division in its outreach in that area. So I think that's important, both from the perspective, I think, of teaching, but also research. There's the whole area of policy and practitioner relevant research, and the opportunities for harnessing early career researchers from across the Commonwealth. There's also the opportunity about strengthening, as some of you have talked about this, in fact, strengthening relationships and dialogue between particularly academic, business and policy making bodies. I think, Nicholas, there are probably close to, I don't know, of the 90 or so Commonwealth organizations, probably around 20 to 25 perhaps have some sort of private sector interface, if you would look at the accountants and the lawyers and various others. So maybe there is something around that particular community. There is something about the Commonwealth's organizations linking and leverage. If you look at something like the Commonwealth Enterprise and Investment Council, the private sector body, you've also got recently established as a Commonwealth Secretariat program, the Intra-Commonwealth SME Association, the Association of Commonwealth Universities was mentioned, of course, the Commonwealth Parliamentary Association, if you want to get policymakers together around this. In fact, I was on a call just earlier today with them, and they were talking about their new strategy, which is much more geared towards partnerships. There's the Commonwealth Local Government Forum, there's the Commonwealth Association for public administration and management. I'm not sure actually if that doesn't exist anymore, but at least that those networks and relationships are probably there. And there are others. And then, of course, you've also got the whole area around policy development and guidance, feeding into key ministerial meetings. The whole area, Robbie, that you've been talking about, and also Ekoshe, critical importance. In fact, many of you, David, as well, about the importance of training and capacity building. I think that's, I know that Robbie, you developed a disaster management and mitigation program. It's a great model and example of that. I think also there's this area providing a platform to help design, develop and deliver effective approaches to risk and resilience. Some of the things that Ekoshe, you were talking about, the broader sharing of knowledge and best practice and the highlighting. And I think this was something that I think came out quite strongly in part of our discussion today, the highlighting the new emerging cascading and systemic risks. I mean, the one area that we probably haven't talked enough about today, we haven't really got time, but is the whole area of emerging technology and the consequences of that. There's been a greater appreciation of that perhaps in the last year as we've been having to rely more on technology. But also if you look at the issues around artificial intelligence and other areas as well. Indeed, Bala's question around how is artificial intelligence affecting the insurance and risk management area. These are all areas we don't have answers to, but we could perhaps be much more effective of getting solutions from or for by working together in the Commonwealth, where you've got some ready-made networks that are there that need to be drawn together. So the question is, who's going to do it and how's it going to happen? The Commonwealth's new strategy, which is, I think, being unveiled shortly, talks about dynamic risk management, and I think has a much stronger focus on that in its approach. But I think also, it's much easier. I don't know whether Nicholas or Robbie will agree, but it's probably not easy to get Commonwealth organisations to talk to each other when you have a big meeting coming up, as we have with the Commonwealth Heads of Government meeting. There's just more people speaking to each other in that period. So I think those are just some initial thoughts. Robbie, is there anything that you want to add or subtract to that?
I totally agree with what you're saying. Actually, can I just say also, one area of great support I found along the way are the foundations belonging to the major accounting firms like PwC. When I've had an idea for an initiative, I go to them and try and find a way that it connects with one or two areas which they're looking at. And they've always been very accommodating. And I worked with PwC actually in New York. I suppose that was one of the reasons I was able to do that. But so that's that. But also what Ekoshe was saying, I mean, the really important, the Commonwealth Finance Ministers meeting and the IMF Small States meeting, which I've been privileged enough to attend on many occasions, hugely important, because actually you suddenly got in town an enormous number of people who would otherwise not engage. And you can actually, as long as you've got a sensible subject, you can say, look, we're going to have a little seminar on this, and they'll send one or two of their senior people to come and listen. And you can develop something. And I know Ekoshe has found that to be a very efficient way of meeting people and developing ideas. I'm actually very impressed by the way that disaster risk preparedness is beginning to bring a lot of Commonwealth countries together, strangely enough, on all sorts of levels, whether it's finance, government, economic, everything, and education. I mean, I've been looking at, we now have 10 states in Africa who have volunteered to be a part of our first aid Golden Hour training program, which is run with our local police force and the senior university teaching hospitals, because it's vitally important that many, many more people know how to deal with people who suddenly find themselves in a road accident or something like that. You'll be amazed. Once you bring that into the educational programs, how much better the statistics become in saving lives. Absolutely extraordinary. And the same, by the way, in Australia, which was also quite extraordinary. You don't expect, but then of course you suddenly realize Australia is such a big country and people need to understand how to deal with issues pretty quickly, because they're going to have to wait for hours otherwise for some help.
Indeed, indeed. Well, I'm just going to pass the floor back to Philip, who opened the proceedings earlier this afternoon. But also just to say that there's been clearly, it's been a very rich discussion, although there's been a smaller group of us. But I think a very rich discussion, and I think certainly has given Robbie, Nosheen, and myself something to work with in terms of taking these conversations forward. I know that there are people that were interested to join today that wanting to follow up in our discussion. So, Philip, I'll pass back to you. But in the meantime, thank you all for joining us today. Philip.
Well, thank you very much, and thank you for arranging these last three seminars, Arif. I mean, it's been a tremendous kind of masterclass in the particular areas that we've talked about, and of course the risks apply to Commonwealth heads of government meetings as well, and I'm not quite sure what the sort of calculation of risk is of the likelihood of heads of government actually meeting in Rwanda, given that Boris Johnson today has just cancelled his visit to India. But it's an area in which Commonwealth experts can pool their knowledge and think really creatively about issues that affect everyone. I hope that this will feed into subsequent discussions, both at an intergovernmental level and at a civil society level. So thank you all very much indeed. It's been a fantastic discussion. Thanks to all our speakers and to Arif for chairing so well as always. Thank you all very much.